Welcome to Policy on Demand. I'm Nita Asher. Treasury recently released Notice 2023-7, providing interim guidance on the application of the Corporate Alternative Minimum Tax, CAMT or CAMT, that was enacted as part of the Inflation Reduction Act and is effective for tax years beginning after December 31st, 2022. To shed light on this guidance is Olivia Orobona, a principal in PwC's Mergers and Acquisitions practice, and Ross Margelefsky, a partner in PwC's Specialized Tax Services practice. Olivia, Ross, welcome.
Happy to be here.
Thanks, Nita.
So Olivia, the notice covers a broad range of areas in which taxpayers had questions concerning the application of CAMT. Could you briefly explain what the first round of notice covers and what questions Treasury has left unanswered?
Sure, absolutely. So near and dear to my heart is obviously corporate mergers and acquisitions. And the big question on the table there was, how do we treat tax-free transactions for GAAP purposes if they're going to create book income? And thankfully, the new notice provides some guidance that says, if you have a non-recognition transaction for tax, then you can exclude that from our adjusted financial statement income. So that was a welcome sort of clarification in the notice as to how to interpret how we're picking up items in AFSI. Second, there are some depreciation concepts that Ross will get into that the notice also clarifies. There are additional safe harbor provisions that govern, how you determine an applicable corporation for 2023. That's highlighted in the notice. There are additional items regarding how you treat proceeds from credits in AFSI, and the guidance says that you exclude certain proceeds from specialized credits as well. What the notice does not cover are some international front issues like the double taxation of distributions from a foreign entity. There are other additional issues as far as attributes for the corporate AMT. How do we think about allocating that when one member is sold from one AFS group to another AFS group? Are there going to be limitations on the usability of certain credits and attributes? And additional items like, how do you define predecessor in the statute? What does it mean to have an ownership change to determine whether or not, one's an applicable corp, if you meet certain standards so that you no longer are an applicable corp? And one of those items is to experience an ownership change. And the government is asking questions from taxpayers and folks out in the community to kind of weigh in and say, what are the transactions that they should look at to kind of identify those events?
Okay, so some helpful guidance, but still a lot of unanswered questions. And so, Ross, what surprises did you find in this notice?
Sure. So I think there are a couple of potential surprises as it relates to the adjustments for book depreciation. The first is that the guidance applies to assets that were placed in service in any taxable year, even those prior to the enactment of the CAMT. And what this means is businesses may be surprised to find that the adjustments increase their AFSI. And this could happen because they placed an asset into service in a prior taxable year, potentially fully recovered it through bonus depreciation. And now these adjustments are disallowing the book depreciation, but there's no longer any tax depreciation to offset that. Mm-hmm. The other is that while the notice allows for adjustments to depreciation for depreciation that's been capitalized and recovered through cost of goods sold, it only allows those adjustments in the year that the depreciation actually is recovered through cost of goods sold. I think some businesses may have been expecting more of a 163J type approach, where depreciation deductions are allowed regardless of the period in which it was actually recovered.
And so we saw the 163J approach evolve over time, and we'll keep an eye to see if there are any changes to this depreciation aspect. And so, Olivia, what questions have you been receiving from companies?
So given that the notice kind of came out between much of everyone's holiday break, I think folks have been just rapidly digesting. I think the guidance that has come out for a lot of folks is favorable. And I think as folks are digesting, the questions will slowly be coming in. But one key question that is coming up is when we'll see additional interim guidance. And I think at this point, that's unknown at this time.
And so, Ross, what advice are you giving to companies as they work through, various CAMT issues?
Well, you mentioned the evolving nature of guidance. So this is just a notice of intent to issue proposed regulations. And then they still need to get to final regulations. And as Olivia mentioned, they're working on a number of different issues. So my advice would be keep in mind that we're still very much in the early days. And if there was something in the notice that you disagree with or something that you were hoping to see that wasn't included, there's still plenty of time to make your voice heard, and you may want to consider submitting comments.
Excellent. Well, thank you, Olivia. Thank you, Ross, for joining us. And thank you all for joining us on Policy on Demand. We look forward to seeing you the next time.